The statement was made public on Thursday. It was submitted as a third-party brief supporting the European Union in a dispute with China that could have major repercussions for the WTO's future. China is urging the EU for recognition as a market economy. The designation would lead to dramatically lower anti-dumping duties on Chinese goods by prohibiting the use of third-country price comparisons. CGTN's Owen Fairclough shows us why the designation matters to both the U.S. and China.
If you talk to some of the voters that helped elect Donald Trump here in the United States, particularly in key swing states like Pennsylvania, which used to have lots more steel mills than it does now, they'll tell you it's because of China that a lot of their jobs were lost and those steel mills were shuttered. So it matters, particularly when markets like the US are flooded with cheap imports, and those leaders accuse countries, particularly China, of not pricing those goods correctly, effectively dumping those products on the market. We know this is a long-standing complaint. It goes way back before the Trump presidency. The focus is obviously on China, though the EU, for example, has more complaints about this kind of thing against China than any other country in the world right now. And as we heard there, it's all about what is fair market value for these goods, and that's essentially what's stopping China from getting into the WTO. Opponents are saying you simply undervalue your goods, and therefore the playing field isn't level. When we have these kinds of trade disputes, we can't really gauge what is a fair price for the goods. China, for its part, accuses organizations like the European Union of now moving the goalposts, saying, well, you were going to let us into the WTO around 2016. Now you're saying we're going to change the metrics, and that's at the heart of these latest complaints.